Right. So, good morning, everyone. This is Aaron Rana, your moderator for today's call. I hope all of you had your morning coffee, or at least your inbox under control, because we have a productive session lined up now at 11:30. On behalf of RIR Power Electronics, I extend a warm welcome to all analysts, investors, and participants joining us for the Q2 and H1FY 2026 Analyst and Investor Call, where we will walk you through the company's performance for the quarter and the first half of the financial year ended 30th September 2025, along with key strategic developments and the road ahead. We truly appreciate your continued interest, time, and support. As you are aware, the financial results for Q2 FY26 have already been submitted to the stock exchanges. Accordingly, today's session is intended to provide deeper context and clarity on our business strategy, operational progress, industry outlook, and long-term value creation initiatives. Before we proceed, a brief standard reminder to all participants. Certain statements made during this call may be forward-looking in nature. These are based on the company's current expectations and are subject to various risks and uncertainties which may cause actual results to differ materially. Joining us on today's call are Dr. Harshad Mehta, Non-Executive Chairman, and Mr. Ankit Shah, Finance Controller. We will begin with opening remarks by Dr. Mehta and followed by Mr. Shah presenting the financial performance, after which we will open the floor for Q&A session. So the Q&A session, please share your name and organization in the chat box and send it directly to me, Aryan Rana. Okay, so we will then unmute your line so you can ask your questions. With that, it's my privilege to invite Dr. Harshad Mehta ji, Non-Executive Chairman of our company RIR Power Electronics Limited, to share his opening remarks. Thank you, and over to you, sir.
Thank you, Rana ji. Aryan ji, good morning, everyone. Thank you for joining us. Sorry for the delay. My flight was delayed, and sorry to keep you waiting. I am pleased to share that Q2FY26 has been a strong quarter for RIR Power Electronics. It's marked by healthy revenue growth, sharper profitability, and meaningful margin expansion. Our performance this quarter reflects operational resilience and our commitment to steady, quality-led growth as we continue our strategic transition towards advanced power electronics and semiconductor technologies. During this quarter, revenue grew 36% year-on-year and 22% sequentially, supported by improving demand across industrial processes, renewables, railways, power infrastructure, as well as defense-linked applications. Our investments in strengthening our airing depth and enhancing service responsiveness are translating into stronger customer engagement and higher repeat businesses. On the operational front, we delivered EBITDA growth of 77% year-over-year, with margins improving to 17.01%, reflecting better product mix, improved cost structures, and disciplined execution. Profit after tax more than doubled compared to last year, supported by growing scale as well as tighter operational controls. Strategically, we made significant progress on our 618 crore rupees silicon carbide ecosystem facility at Bhubaneswar. Government of Odisha has already accorded fiscal support of 32.56 crores for phase 1. Half of the money we had already spent, and just this Saturday, they also deposited 26 crores in our NLA account for going forward. We are progressing steadily with planning, talent build-up, project readiness. This facility will play a pivotal role in making India more self-reliant in high-performance power electronics and will support growing demand across electronics, renewable energy, railways, mobility, and defense. As a matter of fact, in September quarter, we delivered 10,000 devices for Indian Navy use. For silicon carbide devices, first of its kind, first in India, and first on behalf of RIR. We have also initiated the process for NSE listing, which will broaden the institutional participation, enhance visibility, and strengthen governance benchmark. Overall, we remain focused on cost optimization. We do expect a gradual improvement in margin over the coming quarters. I do thank you for your continued trust and support. I would like to thank our customers, partners, employees, shareholders for their trust and continued support. I will now request our finance head, Ankit Shah, to present the financial performance for the quarter.
Thank you, Mr. Mehta. I would now present the standalone financials for the quarter and half year ended 30th September 2025. So, moving on with the quarterly performance for Q2 FY26. On a standalone basis, revenue from operations stood at 25.64 crores compared to 21 crore in Q1, marking a 22% sequential growth. Revenue grew from 18.82 crores year-on-year basis, reflecting a 36% increase. EBITDA for the quarter was 4.36 crores versus 2.46 crores in Q2 FY25, a 77% YOY growth. EBITDA margins improved to 17% compared to 13.09% last year, an expansion of 392 basis points. PAT came in at 3.15 crores, which was more than double from corresponding quarter last year, reporting an increase of 105% increase. PAT margin improved from 7.96% to 11.97%, reflecting a 400 basis expansion. EPS for Q2 expanded to 0.47 per share compared to 0.21 for corresponding last year. Now, going on with the half-yearly performance for FY26, for the first half of the year, the revenue stood at 46.6 crores compared to 39.87 crores in H1 FY25, which represented a 17% YOY increase. PBT was recorded at 6.92 crores compared to 5.88 crores for the corresponding period last year. PAT improved to 4.89 crores, significantly higher than 4.36 crores reported for corresponding last year, which was around 12% YOY growth. Liquidity remains comfortable and our balance sheet continues to strengthen. Looking ahead, we continue to see strong growth momentum across various sectors and expect to maintain healthy growth and profitability trajectory. With that, we can move on with the Q&A session.
All right. So I would request all the participants to, send your question or your name and organization name in the chat box to me. It is Arin Rana, and we can allow you to sort of unmute your line and then you can ask your questions. Okay, so we have first question from Mr. Ashraf, and 1 second, I'll just unmute your line, sir. Yeah, go ahead. Rajiv, please speak, ask a question.
Am I audible?
Yeah, yeah.
Now you are, yeah.
Okay. So I am Raj Saraf from Finvestors, and congratulations on this good set of number on sequential growth. So apart from that, what we are uh, already doing, uh, when this capex of more than 600 crore rupees, which we are waiting for, is gonna live, or is it already live, and how much capacity we intend to use in this financial year, and when can we expect this capacity to work on optimum level, and any further capex plans if we have in the same zone.
Yeah, so I think, as we mentioned last year, the government changed in Odisha. So overall funding on part of government of Odisha has been delayed about 6 months. However, we have been moving forward with our first part of the project, which is epi reactor, and that should come online in January 2026. However, as I mentioned to you that in Q1 and Q2, we also shipped almost close to a US dollar $95,000 worth of material, $10,000 devices to for Indian Navy. So we are ahead from our revenue perspective. Uh, this components were manufactured, outsourced manufactured by Taiwan Fab using RIR IP 100%. So this is the progress that we have made while we wait for the full expansion of our fab to be executed. So at this moment, we would expect the revenue to flow from January 2026 with the EPI. And year 2026, we will do the packaging. The entire fab and the whole ecosystem will take about 2.5 years to come online.
Okay. And sir, how much we can expect this year to be produced, and how much we intend to do next year, and any capex plan further, sir? You left the question.
So, yeah, I think this fiscal year, as I said, we already have done about 68 crores, and we will do another 50 crores on a capex side for EPI and getting clean room ready and so forth. Uh, in terms of revenue from this particular fiscal year, it is uncertain because of the fact that we are still working with Odisha government to get the power line, or the power that we requested almost a year ago. So I'm pushing for it so that we can start generating revenue Q4 FY26.
Okay. Okay. Thank you.
So,
Thank you.
yeah. Now the second question is from Mr. Kaustubh Datta. I'm unmuting your line, sir. Please go ahead. Kaustubhji, can you hear me? Kaustubhji,
I'm ready.
yeah, please ask your question. Please go ahead.
Aryanji, it seems Kaustubh's line is not yet unmuted.
Okay, one second. I'll just. Yeah, now we can hear him. Kaustubhji,
Hello.
yeah, we can hear you, sir. Shall we move to the next participant?
Yeah, just take the next question. We can take costume
Okay,
later.
so we'll take Rupesh Tatia. Rupesh, you can. Rupesh.
Yeah, hi sir, am I audible?
Yes.
Yes, Rupesh, you are audible.
Yeah, I had 2-3 questions. So first question, sir, is this phase one is where we're going to make the silicon carbide wafer. I am not clear how much capex has been done. What is the capex outlay? Whether the reactor line is in place. This is for what? Is it 100 millimeter? Is it 150 millimeter? Is it 200 millimeter? How many boules or wafers can we grow in a year? Can you just give some idea around these things first?
Sure. So the uh, 1A and other things, I think that was a little bit old culture. What we are right now is the entire project is 618 crores, which includes three parts. First of all, let me clarify the entire line, which is the first part is EPI, second part is device fab, and third part is packaging. The entire line is 150 millimeter line. The capacity of the plant is 4,000 wafer per month, once fully implemented. The capex for EPI is about 100 crore, and or 58 times 2, which is 106 crores. And the capex for the packaging is about another 100 crore. The fab would be 400 crores total.
Okay, and has this? Where are we on the phase one? I mean, how many reactors? What kind of? How many wafers can we grow?
Yeah, so right now, our clean room is under construction. It should be completed by end of this month. Once we finish the clean room, we will move the reactor in the clean room. We already have one equipment, one tool, which is 150 millimeter semi-automated, and we have the purchase order for second tool, which is automated advanced manufacturing and throughput. That should come in about April or May 2026. Each reactor, in terms of how many epi wafers we can make, depends on the thickness of the epi. Our focus is medium and high power. That means the minimum thickness for epi would be at least about 30 microns, maybe as high as 180 microns. And it depends on the thickness. We can determine the time and the throughput.
But one reactor, I mean, I think the growing takes 1 week, right? One boule, my understanding is to grow one boule, it takes like more than a week. The growing is very slow. So one reactor can give you how many wafers?
Yeah, so let me clarify. We are doing silicon carbide epitaxial wafer. So we would buy silicon carbide raw substrate wafers. We are not growing the boule. We are buying the silicon carbide substrate wafers, and on top of it, we are growing 20 microns all the way up to 180 micron, very defect-free, ultra-pure epitaxial layer on which the active devices are fabricated.
Okay. And sir, is I mean, in this reactor that we're gonna put, is our yield comparable to the global players? I mean,
Yes,
some color around that?
Yes, we expect about 85% yield, and which is very competitive to the global players. Also, as I want to make sure that our core expertise we have very fewer competitor in medium and high power. Most of the Chinese players, as well as most of the other players, are doing 12 to 15 micron thick epi, which is a lot easier, but still, even at a higher thickness, we are achieving same yield.
Okay. And sir, this 600 crore capex, how are you looking to fund it? I am not clear if I think you've got some fiscal support, but I don't think it's from central government. I think Odisha government, you have got something. So overall, if you can throw some light on how are we going to fund these three phases?
Yeah, let me ask, request Ankit to give you a little more detail. I can do that as well, but Ankit is much more familiar with it.
Yeah. Thank you, Mr. Mehta. So, see, basically, it is divided into two phases. The first phase would be epitaxy and packaging process. So, both combined together, we expect a capex of around 225 crores. Okay, out of which 50% would be a grant that we would receive from Odisha government. Okay, so roughly 110 crores is what we need to put, out of which we have already done a preferential issue of 85 crores and we have received the last tranche as well. So all 85 crores have been accounted for, and we are also looking to raise a debt to cover up the balance portion of 30 crores. So with that, we'll be able to achieve the financial closure for phase one. For phase two, the total capex is around 400 crores, out of which 200 crores will be the grant expected to be received from the Odisha government. And out of that 200 crores, we are looking to do debt of around 100 crores and an equity of around 120 crores. Hope this answers your question.
Yeah. This is clear. I'll come back in the queue. I have a few more. I'll come back in the queue.
Sure.
Now the next question is from the line of Sandeep Rao. Please unmute yourself, sir, and you can go ahead.
Okay. Am I audible?
Yeah.
Yes.
Okay. Sir, congratulations on the good set of numbers. Sir, some pending queries repeating. Sir, what is the status of the new MD appointment?
You know, sometimes there people say that if you are drinking a buttermilk, or if you are drinking a hot milk, and you get burned with it, when you try to drink buttermilk, you are more careful as well. So what happened last year in terms of kind of a setback or pre-announcement or whatever you want to call it, we are very close, but I will not tell you any more information except it would definitely happen by end of this year.
Okay. So because the entire dependency is there, because unless we have top level leadership, since you are commuting from US, it becomes difficult unless we have people on the ground. That is why we keep repeating this question.
Yeah, no, we have a very good team on the ground, and even though I am in US, I am almost like working in India as well. I work literally 18 to 20 hours a day. No matter what time anyone calls me or WhatsApp message me, I would respond back even no matter at what time. But I do understand your and need and so forth, and we are very furiously working on it. What I'm trying to find is someone who will complement the technical strength that we have. And this particular field in India is quite new. We are one of the ones, we are the very first one, and we have been doing this for a long time. But now there is a tremendous momentum in terms of infrastructure, investment, as well as Make in India and self-reliant India. So I'm looking for the right person who can bring all of these capabilities and complement the technical strength and administrative strength and a financial strength that we have.
Yes, sir. Because in last con call you told we have shortlisted 3 people. We may finalize one of them.
We as I mentioned, out of 3 people that we shortlisted, one decided that he was very close to retirement and he didn't want to, in his opinion he was happy with where he was. One we rejected, and a third one is still outstanding, but we haven't heard 100% confirmation. We are hoping that by end of this month we will get that resolved.
Okay, sir. The second thing is you told that for the Odisha plant, electricity we have to sort it out. You think it can be done before say end of December?
We are we are trying to push and address all the issues. They need they are getting power from a 33 kV line, and what they need is a step down transformer from 33 kV to 1 megawatt. And so transformers are right now on a long lead items globally, but we are trying to work with the ITCO, which is the infrastructure organization in Odisha, to make that done quickly. They will provide us enough power for one reactor, but before we get the second reactor, we need 1 megawatt of power. And a second reactor will come sometime around May of 2026.
Sir, number three is sir ISM 2. There was a thing that we may bid for it. Any progress in that?
We will bid. The progress is we have been working with all the uh, key blocks to what ISM 2 or ISM people are looking for, which is the off-tech market as well as technology partner and finance. So of this, we have addressed the two, which is the off-tech and a financing issue. We are looking for the technology partner specifically for medium and high voltage silicon IGBT, uh, which right now is the only company which is making is Infineon. But we have located one company in Ukraine, and we are dealing with it and working with it, trying to finalize the technology agreement and so forth. The other company that we have been trying to deal with is Mitsui, and I'll be meeting with them around early December in Japan.
So
Our
Mr. Rao, can I request you to come back
okay.
with question? I'll just, So we have another participant, Mr. Uddhav Holkar. Please unmute yourself and ask your question, sir.
Hello.
Yeah.
Sir, my question was regarding the Taiwan facility that company has taken on rent.
The Taiwan facility is our contract manufacturer.
So, is it for only a temporary period or it is taken for longer period?
No, it's a longer period. As and when we need it to fulfill the demand in the market. So they have used our IP and proved that they can make product with about 85-90% yield. And those products are qualified by the customers, so they are equally competitive globally, and so we can provide silicon carbide product with RIR IP. We are not counting on any IP. The only facility what Taiwan's facility is doing contract manufacturing for us with a similar equipment that we intend to purchase in a similar capacity and a similar 150 millimeter equipments.
Okay. Thank you, sir.
Sure.
All right, please raise your hand if you have a question. Mr. Kaustubh Datta, you had a question. Yeah, please unmute yourself and you can ask a question. Mr. Kaustubh Datta. Yes, sir, please unmute.
Aryan, I think we'll take the next caller. He is not. I don't think he's responding.
Okay, so we have another question from the line of hand raise. Mr. Rupesh?
Yeah, hi. Sir, my question is this silicon carbide epi growing. Have you done this in somewhere at a pilot scale before we try to go commercial, either in the US facility or existing facility?
So we have acquired the tool from Italy. They have provided the recipe, a general recipe. In addition, we are working with A-Star University in Singapore to provide the additional help as we begin our qualification process. And the significance of A-Star is they are about 6 months ahead of using same tool to grow silicon carbide epi. And we are working very closely with Professor Suzy at A-Star to try to get a similar recipe as well as yield and the defect characterization tool, what they have.
Okay. So the Italian company and the Singapore place is providing us the technical support.
Recipe, yeah.
And this tool that we have bought, semi-autonomous, how many wafers can it process per day?
So our target is 4,000 wafers per month. And how many wafers it can process per day, as I mentioned, depends on the thickness of the epi.
Okay. So 4,000 per month. Okay.
Yes.
And can you give some idea about costing? I mean, what will be the input silicon carbide wafer costing? What would be the silicon carbide epi wafer costing? Yield you said will be 85%, so there'll be 15%.
Yeah.
So if you can explain the economics a little bit better.
Sure. So I think silicon carbide wafer in the last year or so, the prices have significantly dropped. But silicon carbide raw silicon carbide wafer, substrate wafer, 150 millimeter, it's about $250 per wafer.
This is what thickness, sir?
That's about 350 micron thick.
Okay.
Because that supports the mechanical strength of the wafer, so it doesn't break.
Okay. So $250 input, then?
Yeah, and then what we add is another $250 for 12 micron or so wafer, silicon carbide epi layer.
Okay.
But as the thickness goes higher, that amount is not linear, but it goes significantly exponentially because it is difficult to grow thicker epi.
Okay. So maybe some idea, let's say 50 micron will be at what price will sell, and 100 micron, or I mean whatever is the between 15, 20 and let's say 100 maybe.
Yeah, 50 micron would be about $800.
Okay.
We paid 180 micron thick epi almost $1,500 when we use those devices. Well, we use those epi for US Army application.
Okay. So $250 input, and then the selling price is between $800 to $1,500.
Correct, depending on the thickness. That's why I'm not giving you one specific price, because thickness can vary on what voltage device you want to make. Usually 12 micron will give you 1200 volt devices. 30 micron will give you 3300 volt devices, and so forth.
Okay. And in out of this 4,000 wafers per month, I mean, what would be our eventual target? How many we will make high thickness, and how many will make normal thickness?
Yeah, I think our intention is to be focusing on medium and high thickness. And the reason being, China is very aggressively competing globally in trying to get the 1200 volt market as much as they can. in terms of automotive application and so forth. Our focus is going to be 3.3 kV for Indian Railways, as well as defense applications, and grid and renewables as we go higher. And right now, I think, Ankit, do you have any target, I mean, any revenue projections that you had?
Right. So basically, considering that we were to start the AP process with that one reactor, we had 1 quarter for this particular financial year, and we were targeting at around 8 to 10 crores revenue out of that for this fiscal year.
Okay, and next year?
Next year. Next year, we'll need to just check the data points. Maybe
We would have two. First of all, we would have 2 reactors next
Right.
year.
Right.
We have 2 reactors, and I expect about 60 crores or so revenue from EPI.
Okay. And sir, this whatever 60 crore we're targeting next year, all of it will be largely Indian customers?
No. It would be about 60%. There is no customer in India except ourselves when we get the device starting. But there are still government labs who are looking for EPI layer for defense kinds of applications and so forth. But the volume is not very high. I would say about 65% would be export, 35% would be domestic.
Okay. And have you had discussions with these customers in, let's say, in domestic market or export market?
Yes, we have the letter of intent as a qualification for companies like Alpha Omega Semiconductor, ST Micro, Microchip, and so forth.
Acha, so you have a LOI from them?
Yes.
Okay.
Yes.
That is very good to know, sir. And then how about the follow-on phases? I mean, to grow from EPI wafer to final cutting, packaging, final IC.
Yes, so as Ankit mentioned, there are phase 1, which is EPI and packaging, and the reason being that second phase, which is the device fab, the lead time for the equipment is about 1.5 to 2 years. So while we order the equipment and wait for it, we would have devices processed with our contract manufacturer in Taiwan, and we'll set up packaging at Odisha.
Okay, but to order the equipment, we need to first arrange for the funds.
Yes, because of the fact that the advance for the equipment, it was very, a year and a half ago, they were asking 50% advance. Now that 50% advance has come down to 30%. But yes, still we need at least 30% of that 400 crore capex for advanced equipment.
Okay.
For placing orders.
Okay, and how much time it will take, sir, to once we have all the funds ready and equipment in our hand, which is probably at least a year away from now. After we get, how much time it will take to complete the capex?
So it's about a year and a half.
Rupesh, can I request you to come back?
Yeah, sure.
All right. So we have a question from Mr. Atul. Sir, please unmute yourself and ask a question.
Great set of numbers, sir. My question is, sir, regarding what is the technological roadmap for the company?
The technological roadmap for the company, and it's a very good question. Thank you for asking it, because RIR is not new in power semiconductors. We took over RIR in 2005. Even at that point, RIR was making relatively lower power silicon devices starting from silicon wafer. So there was one only company in India who was making it, starting the entire process for the devices, for welding rectifiers and so forth. When we took over, we brought in technology for medium and high power for Indian Railways as well as process industries, and now we are expanding into defense in terms of Make in India. So, from the perspective of technology, there are two generations in terms of starting material. Silicon, we have gone to the limit of making 8,000 volt silicon devices for army as well as transmission kinds of high power applications. For silicon carbide, our technology roadmap is we will start at 1200 because that's the first step. However, our focus is going to be 3.3 kV, 6.5, and those are the MOSFET. About 10 kV, you go into IGBT, and we'll go up to 20 kV IGBT silicon carbide. We already have done so. We provided 22,000 volt silicon carbide diode to US Army. So it's nothing new for us. We will be able to do it. It will take a couple of iterations, but at the same time, we are already trying to talk to the customers, such as Odisha Grid, as well as NTPC and so forth, because they are the one will be doing transmission work. And I'm not at a liberty to say the names, but we are working with the right people who will be looking at high voltage DC transmission that our Prime Minister said that India would be planning to 2,500 megawatts of transmission corridor. And of that, 500 megawatt has been discussed very the first part, and we are talking to that in company to use our power electronics, power semiconductor devices, because we are the only one who is making in India.
Thank you, sir. Thank you.
Okay, so next question is from Mr. Costa Datta. You can unmute yourself, sir, and ask your question if you can, otherwise. All right, so Mr. Costa is not able to unmute himself. He has asked me a question. At 618 crores, investment fully done fully done. What's the revenue expected at, say, 90% of the capacity?
See, in a semiconductor, I will give you the industry average. Our goal is to do better than industry average, but we are not going to be magically change that industry average in terms of asset turnover ratio. In semiconductors, the asset turnover ratio is about 0.6 to 0.8. And I would say we will go up to between 0.8 and 1.0. So you can expect once we are fully operating, revenue is about 600 crores or so.
Okay. All right, sir. Thank you so much. Now, next question is from Mr. Sandeep Rao. Sir, please go ahead.
Sir, from what I could understand, you require a lot of money from for completing these projects and giving capital equipment orders. Any plan to induct strategic investors?
We have been talking, and we are absolutely, we have planned to bring strategic investor as well as FIIs and so forth. So Ankit can answer that question better, but yes.
Yes, so we are in talks with strategic partners to join in, but we will not be able to share any names currently as the discussions are currently ongoing. So once something is formed up and finalized, we'll do proper disclosures at the stock exchange.
So why I'm telling you, sir, because the way our market capitalization is there, unless some validation, we are hopeful that obviously RIR technology and implementation will happen. But if a strategic partner comes, then that gives a lot of credibility to the whole picture, and then we can have a re-rating of the stock as such. That is why, if it can be done expedited, then it can help a lot of minority shareholders to actually see the fruits.
I do agree with you. I think, and it's this was like and then I'm not. It's a very bad example to compare, but I would just give it an example that when people are looking at to buy flats or real estate properties or apartments in India, they would say, "Oh, right now the value is too high. So let's just wait and see what happens to the value." And they wait another year, and the prices keep going up. So we have been always looking at corporate investors, strategic investors, even even from the time when the market cap was low, 350 to 500 crores. And even at that point, they would say, capital, market cap is valuation is too high in terms of, so they would not invest. And in a year, that market cap will continue to rise. I think if you look at it, the entire EMS sector in India, because of the tailwind of electronics manufacturing and a very high volume market domestically, I think those things will continue to climb. And I see RIR as no exception. As a matter of fact, we are pushing high value, high value in terms of infrastructure projects. And I don't see, even with the companies with a very high valuation or a lot of resources, being able to set up what we are doing in semiconductors. We are going from very first step all the way to the last step in terms of silicon to systems or silicon carbide to systems. So as a make in India or self-reliance in India momentum keeps on going, I feel our market, our demand for our products and so forth, our valuation will stay strong.
Sir, you talked about NSE listing. Can you give us some update by when can we expect a NSE listing?
Ankit,
Yeah,
go ahead.
I'll take that. So the NSE listing process is underway, and we expect that to get completed before end of this fiscal year. So we expect it to become functional by 31st March 2026 or earlier.
Okay. And sir, you are talked about a debt tie-up. So any bank tie-up with, as we know that you also get an interest subsidy, and
Yes.
whether any bank tie-up has been done already for at least phase one?
Right. So we have current negotiations that are going on with two banks for same amount. So the negotiation is going on, and whosoever would be able to provide the better terms will go ahead with that particular bank.
When can we expect that finalization of bank?
By end of November or mid-December.
Okay. Okay. Thank you.
Sure.
We have next question from Uddhav Holkar. Uddhavji, please unmute and you can go ahead with your question.
Hello, sir.
Yeah.
Sir, earlier we had given the revenue guidance of 800 crore by new businesses and 400 crore from the earlier businesses. So when will this complete target will be achieved by timeline?
These are the projections that we gave. They all depends on various factors which are beyond our control, such as geopolitical situation, economic as well as security situation and so forth. But I would like to get there as soon as we possibly can. one of the things that I strive for is efficiency and time to market, because that are the advantages for small companies to be uh, cost competitive, quality competitive, and also get to the market as quickly as possible. We don't want to be second, but we want to lead, to be a leader in the market. And especially, I think the company, our technology uh, bandwidth is competitive or even better compared to Siemens, ABB, Mitsubishi, Hitachi. But our size is very small. But our focus is power electronics in those sectors. And I expect to do as much as we possibly can in terms of strengthening marketing effort, technology effort, visibility, uh, PR, and customer education, and so forth. So I I expect that we'll try to achieve that as soon as we possibly can. Uh, we had, I think, earlier our projections, we said 2030, 2031.
Thank you. Yeah, now we have question from Rupesh, Mr. Rupesh Tatia. So please go ahead.
Yeah, thank you.
Please unmute yourself.
Sorry, thank you for the opportunity again. How are you looking at the 200 millimeter technology, sir? I mean, I think one of the players already has a fab, I think in New York. So how, I mean, I'm not sure if technology moves in silicon carbide as fast as silicon. When do you think 200 millimeter technology will become mainstream? And are the reactors that we are buying, I mean, I'm not sure, maybe it's a stupid question, but can they work across both 150 millimeter and 200 millimeter?
Thank you very much. First of all, let me tell you, there are no stupid questions whatsoever. So you ask a good question. Our reactors, the first one that we have is called P106, is capable up to 6 inches. The next one that we already placed an order is P108, which is capable up to 8 inches. Now, so the reactor is capable to do 8-inch silicon carbide epi wafer. Now you ask the question in terms of viability and economics of 200 millimeter wafer fab. The company that you mentioned in New York, you may also heard that they declared bankruptcy for $7 billion.
Yes.
Right now, and the reason being, what happens is 200 millimeter wafers. The biggest benefit is the number of die that you can make out of it, and that segment is electric vehicle, 4-wheeler, electric and automobiles, and that sector is, there are such a crowded sector with a $1 billion plus companies, and China is focusing on that particular sector like crazy in terms of incentives or whatever. And so when we are smart manufacturing, and will plan business in a smart and a wise way. We don't have money to compete with the much bigger partners and keep on losing our shirt. So we are going to focus on medium and high voltage, where very few competitors are there. As a matter of fact, Chinese players and other players are asking us for technology for 3.3 kV and above, because we have been high voltage processing is what we have been doing for last 30 years. And we have all the do's and don'ts in terms of how to do it right, reliably, high performance, and with reasonable yield. So our approach is going to be focusing on medium and high power. And medium and high power from the process perspective are complex enough where at some point it may seem maybe 5 years out, but 150 millimeter devices are more than adequate enough for medium and high voltage devices. I know there are people who would be looking at it, but at this moment, in my opinion, 200 millimeter has at least for next 3 to 5 years, I don't see that technology to be mainstream because of it's difficult to grow 8-inch epi thicker. It's difficult to make edge termination, which is important for the increasing reliability of the devices. It's called safe operating area. And 8-inch larger die size are difficult to do on 8-inch with a high reliability. So there are many process as well as physics challenges for medium and high power devices for using it on 8-inch. Till we have the material epi quality reasonable enough in terms of all the defects and so forth. And then the investment, the capex investment has to justify the benefit, the cost benefit in terms of manufacturing. At least RIR right now, I would say that we are not, unless we demonstrate 6-inch and we show profitability as well as growth, then we will take to the next step.
Okay. So if I were to summarize that, sir, 200 millimeter will not come anytime soon, next 3 to 5 years.
For RIR, in medium and high power.
Yeah, and 200 millimeter efficiency or whatever economics won't be so good that we will have to, writing off our whatever 600 crore investment we're doing, there will be no write-offs.
Yeah, no. I think unless things change, and it can change anytime, the change is the only constant if you look at it in time. But right now, in last 18 months, I think China has really taken over in terms of leadership for 1200 volt silicon carbide or a 200 millimeter silicon carbide substrate as well as epi. And they really have reduced the cost, whether artificially, whether with whatever you want to call it, but they are really giving very difficult time to ST Micro or all the big guys, Infineon, Wolfspeed, on Semi, no matter who you call it. And that's why I think if you look at it, Renaissance decided to get out of silicon carbide and gallium nitride business. So what we need to do is we need to plan it right. I'm not after the glamour of technology. I stay away from it. For me, the technology is, as I mentioned, there are 4-letter words that I may have repeated, you may have heard it, is...
Hello?
Doctor,
am I audible?
Yeah, you're audible. Dr. Mehta, are you there?
I think we seem to have
Okay.
this connection seems to have lost or something.
So shall we close now? If you have any
Yes,
more,
we close.
you can get in touch with us. So I would like to now invite Abhishek Sawant from Veritas Repetition to
Hear me?
closing remarks.
Yeah, he's back. He's back.
Okay. Sorry that it said disconnected for some reason anyway. So what I was saying is that we need to be looking at not just focus on technology or the glamour of technology. The economics as well as value has to come before what, and at the same time look at the state-of-the-art technology in terms of commercializable technology. Right now, 200 millimeter silicon carbide, I'm not 100% sure, especially not for RIR.
Okay. And so final question from my side is, can you give some idea about, our readiness, because there is a significant supply chain. You have to buy silicon carbide substrate, you have to buy high purity gases, you have to buy all this equipment, you need a really high skilled manpower, So there is a significant, execution readiness that
Yes.
we need to do in all of these areas. So what are some examples you can give to we're making sure that we'll be ready.
So, for example, let me, and this is the real, one of our AP scientists, he came from TIFR. He finished his PhD at TIFR about 2.5, 3 years ago. And he had no opportunity in India to work anywhere. RIR gave him an opportunity, and he was very happy to join RIR. And we leveraged knowledge of what he has learned at TIFR in terms of the question that you rightly said, in terms of quality of gases. And then TIFR said for us, guided us to use steel pipes for the gas deliveries and so forth. So we make sure that we not only put the right equipment, but also the ancillary that goes with it to make sure that our yields are industry competitive, which is about 80 to 85%. And what I have done, again, I have a common sense business, not an MBA business. I'm not downplaying that, but I have a common sense business. And the common sense business is I like to do as much as leveraging as I can. So I have can you hear me?
Yes, I can hear you, sir.
Okay. So what we are trying to do is government has invested significant amount of resources at IITs. IIT Delhi has tons of equipment still in the hallway, put in the boxes. They're not even open. So in my mind, we are working with IIT Delhi on the material side, IIT Bhubaneswar on the device side, IIT Bombay on the application side, TIFR on the fundamental process side, and so far we have not done, but IIT Kanpur on the mechanical side. Gandhinagar also is doing some part on packaging that we'll work with them. So we are trying to leverage, because what our academic institutions need is guidance from industry in terms of practical utilization of the technology. We are not into looking at for papers, but we are looking for products.
Okay, so just final, how many people are we looking to hire for phase 1 and then eventually for phase 2?
So for phase 1, total, we expect total employment at our Odisha Bhubaneswar facility to somewhere between 300 to 400 people. Phase 1 would be about maybe 50 or so. And then phase 2, yeah.
And most of them will be graduates?
Yes, graduates, as well as there are some diploma holders and so forth.
Okay.
We try to have, we are not only all India, we are also looking from some mentors from US. They would come here at least every maybe once a quarter for about a week, 2 to 3 weeks. Train them. That's what we still have. For example, Arun Malhotra is our expert in material science, and he is guiding our team in Bhubaneswar from US almost every day, including working with A-Star in Singapore.
Okay. Yeah, this was great, sir. Thank you. Thank you for being so generous with your time and answers. Really, really appreciate it. Thank you so much.
You're very welcome.
Yeah.
You're very welcome.
All right. As there are no further questions now, so I would request Abhishek Sawant to conclude the event. Thank you.
Yes, thank you, Aryan. And thank you everyone for joining today's earnings call. We sincerely appreciate your time, your engagement, and your continued interest in RIR Power Electronics. Before we close, let me briefly summarize our position today. The core business remains stable with healthy demand across key customer segments. Profitability is within expected bands, supported by disciplined execution and cost focus. The financial position continues to be strong, backed by comfortable liquidity and prudent balance sheet management. And lastly, and most importantly, we are well placed to support the execution of our long-term strategic programs, including the ongoing capability build out in advanced power electronics and semiconductor initiatives. With this, if you have any further queries or questions or require any further information, please feel to reach out to us and we will be more than happy to assist you. On behalf of the entire management team, thank you once again and we look forward to engaging with you in the near future. Thank you and have a good day ahead.
Thank you, Abhishek, and thank you everyone for your
Thank
participation.
you, Iron for your. Thank
Thank
you,
you.
Abhishek ji, and thank you the entire team. I haven't met other, but I'm looking forward to meet with.
Absolutely, sir. We'll organize some kind of meeting in Bombay, and that's all right. Thank you so much. So, on behalf of RIR Power Electronics and Veritas Reputation, that concludes this conference. Thank you for joining us. Have a nice time. Thank you.
Thank you.
All right, take care. Bye bye.
Thank you, everyone.
Thank you.